Y bien, estamos ahora con Nouriel Roubini. Como sabemos, Nouriel Roubini es un economista de nivel absolutamente internacional. Él predijo la crisis del año 2008, la crisis financiera mundial del año 2008, y está en Lima como parte de una iniciativa del Fondo Monetario Internacional que está realizando unos seminarios. Él ha participado en la Universidad del Pacífico, en una reunión con estudiantes, se ha hecho una conferencia. Y todo esto se da en preparación a la reunión de Lima 2015 del Fondo Monetario Internacional. Bueno, vamos a conversar con él acerca de la realidad de las perspectivas económicas mundiales y peruanas. Nouriel, good night. How are you?
Very well. Very pleasure being with you today.
No, it's my pleasure. Well, the last time I interviewed you, more or less 1 year ago, you said you predicted kind of a hard landing in China. You said it could happen, but it hasn't happened, at least until now. I don't know. How is China really now? It has had really a soft landing, I think. But what will happen in China? Do you forecast now?
Well, China has had a slowdown of its growth. It used to grow 10%. Right now it's growing between 7 and 7.5%. Whether China is going to have a soft landing or a hard landing is still open. They have to do reforms to change the structure of the economy. They're doing too much savings, too much fixed investment, real estate, infrastructure, capital in the manufacturing sector. They don't have enough private consumption. Now they're the meeting of the third plenum and now the National People's Congress, and there are reforms that they need to implement to move away from too much investment and increase consumption. If they do that, they will have a soft landing. If they postpone it and they don't do the reform, not this year, growth this year is going to be around 7%, by the next few years there could be a harder landing. Now by hard landing I don't mean the collapse of China, but you could have growth reduced from 7% towards 6%, maybe even lower. That's not truly a hard landing, but will be something that will reduce the demand for commodities by China if it were to occur. So it's still an open question. Can they rebalance fast enough or not? We don't know.
You don't know, but normally the China elite is very efficient in the way they govern, they conduct the policies, you know. So, for example, the prices of mineral prices, what will happen with mineral prices this year?
Well, given the slowdown of China last year, and given that China is becoming less resource intensive in its growth model, wants more consumption of services, last year there was already a correction of commodity prices, including industrial metals, including, for example, copper, including also gold and silver, even if gold and silver have more to do with what the Fed does, exiting zero policy rates than China. That correction has occurred. As long as China has a soft landing, demand for commodities is going to be still robust. But I would say that in addition to China, another factor is important is that now, after years of high prices, many firms in many countries have done new investments into new capacity for a variety of minerals. So it used to be the case that copper was produced mostly in Chile, Peru, China, but now with high prices, there is new producers like in Congo, like in Zambia. Even in the case of Peru now, there'll be new mines coming to production. So the question is, supply will increase of many of these commodities because of new investments. Demand may be growing more slowly. Some of the price adjustment has occurred. Some more of it could occur in the next year or so. Not a collapse of commodity prices, I don't expect that one, but a further correction is something you cannot rule out.
Well, the other thing is the United States. The economy of the United States will finally recover this year. How much will be the growth of the North American economy?
Growth this year will be better than last year. Last year was 2%. The optimists say US could grow 3% or more this year. I'm more among those cautious who think that it's going to grow 2.5%, 2.6%. It's still uncertain. There are positives in the US. Job market is improving, less of a fiscal drag. The deleveraging has continued. There is the shale gas and oil revolution. But the latest data from the US suggests that growth is still moderate. Some people say it's the weather. Some people say no, there's still some elements of sluggishness. So there will be a recovery. The question is, will it be a really strong recovery or is it going to be a moderate recovery? We don't know.
There will not be a problem with tapering. There is no an inflation potential with now, or what will happen with this the end of the fiscal of the monetary stimulus?
Well, even if U.S. were to grow, say, 3%, I don't expect inflation to become higher. Inflation is closer to 1%. The target of the Fed is 2%. Inflation is very low in many advanced economies, in spite of printing money. Why? A lot of the money has not been lent to the private sector, has been hoarded by the banks as excess reserves. Also, there is a slack in goods market. There is excess capacity. Firms don't have a lot of pricing power. There is a slack in labor market. Workers don't have a lot of wage bargaining power with unemployment being high. And now there is also a correction of commodity prices. So even if the US were to grow faster, 3%, I don't expect that inflation is going to become a problem in the US or Europe or Japan. If anything, there is a risk of disinflation, of too low inflation. And that means that, yes, the Fed will taper slowly. They will finish tapering at the end of this year, but they can wait another 6 months and keep interest rates at zero before they very slowly, starting in the middle of next year, they start increasing the policy rates from zero to higher. What does it imply for emerging markets? Last year, when the tapering talk started, there was a bit of a panic because interest rates were very low. Now long-term interest rates have gone up. People have already priced in the tapering. Countries like Peru and many others that have good fiscal policy, they don't have a large external deficit, are going to be positively affected by stronger growth in the US, and they're not going to be negatively affected by gradual tapering and exit. Well, there are other countries in the world that have really large fiscal deficits, lots of public debt, large trade deficits. They have to borrow money from abroad to finance it. For those countries, they don't do as much trade with the US, and they are affected more by a rise in interest rates. So there are countries in the world like Turkey or South Africa or others that may feel more the pressure coming from tapering and exit. But countries like Peru, like Chile, like Colombia, like Mexico, that have strong macro policy, financial fundamentals are going to benefit from the US stronger growth, even if it's associated with an exit from unconventional monetary policy by the Fed.
And how do you see the Peruvian economy? How do you see our perspective in the near and the medium term?
The Peruvian economy is strong. It has been growing around 6.5% for a decade. Last year growth was a little bit lower, closer to 5%. Why? The Fed tapering, the slowdown of China, the falling commodity prices. I expect that, however, this year growth is going to increase towards 5.5%. Now, the country has to realize that the world has changed for all emerging markets. Cheap money, zero interest rates in the US is going to be gone. China is going to grow more slowly. Commodity prices have fallen, can fall a little bit more. Therefore, while the natural resource growth model is still viable, there'll be still a lot of growth deriving from it. The country has to think about diversifying its own growth model. You have to invest into education. You have to invest into infrastructure. If you have to invest into providing more efficient public services, you have to invest into your own people. There is a lot of structural reform that have to occur in order to maintain this high growth rate, also to increase it over time. The macro framework in Peru is sound. Low inflation, independent central bank committed to price stability, low budget deficits, low stock of public debt. The macro is good. I think that a number of structural reform may be needed over time to diversify the economy, to make growth more inclusive because there is high inequality, and to make sure that people have the skills to compete in this global economy.
Well, we've had very big budget surpluses in the last year, in the 4 or 5 last years, because we have a lot of revenues, and the government hasn't had the capacity to spend that money. So there is more or less 15% of the product of the PBI, I don't say how the PIB, which is accumulated there, savings, liquid savings in the banks, in the central bank or in the banks. What would you do with that? There's a with those savings. Now they are just being there, and there's no movement about that. What would you do with that?
Well, having first of all a buffer of savings in good times for times that are going to be less good is always a prudent thing to do. So you have to keep some of that buffer because maybe commodity prices could correct more. So that's the right thing. Saving good times for the bad times. Should not spend it all. But of course the country is earning probably low interest rates on these assets. There may be productive investments in the country that have a higher return. Investment in education, investment in healthcare, investment in infrastructure. Now, many of these things are expensive, and probably gradually over time is not just using the savings, but you have to raise revenues. You have to increase revenues as a share of GDP. And the way to do it is probably not to tax more the formal sector that has already high taxes, but somehow to reduce the informality in the economy. There are many small businesses that don't pay taxes, and to do it efficiently, you might have to try to broaden the base, including the informal sector. In the formal one, maybe reduce tax rates for everybody so that you have a bigger tax base to generate more revenues that can be used for productive forms of public investment, healthcare, education, infrastructure, and so on.
That's very interesting. And we should also attract even more investment on mines. There's not a, well, there's some discussion here about there is a contradiction between exporting minerals or commodities and not exporting industrial products, for example. But there shouldn't be a contradiction, no? We can use our commodity exports to finance the diversification of the economy. That's possible. What would you say about that?
Yes, it is possible. There are many success stories of diversification starting from natural resources. The United States, California, Australia, New Zealand, Canada, Norway, having mineral and natural resource wealth can be a basis for then diversifying upstream activities, downstream activities. This is a country has great opportunities in agriculture, in fisheries, given the art and the culture, in tourism first of all, of course also manufacturing in sectors related to the natural resources. And if you use prudently your revenues from the mineral sector, you can invest in things that increase those other opportunities. If you have more human capital, better education, you can diversify manufacturing, other activities. If you build infrastructure so that you can have other economic activities, that's going to help. There is lots of stuff can do. Already, the economy has started to diversify. There is many economic activities, domestic services, construction activity, some light manufacturing, fisheries, tourism. All these things can be built over time. And of course, growth has to become also more inclusive, that creates jobs. A lot of mining is good, is not very labor intensive. Other economic activities are more labor intensive. So you have to start using your natural resource wealth to invest into human capital, infrastructure capital, private sector capital, financial capital deepening, innovation, technology, and so on. but by being rich with natural resources, you have the base for doing these other investments.
Okay, thank you very much, Mr. NOURIEL ROUBINI.